Hello, everyone. Thanks for joining myself, Jennifer White, and my colleague, George Soflius, today for our edition of New York State Local Tax of Mine webinar, Tips for Dealing with COVID-19. Before we begin, we want to cover a few housekeeping items. At the bottom of your audience console are multiple application widgets. If you have any questions during the webinar, you can click on the Q&A widget and submit your question through the chat box. If we do not get to your question during the webinar, we'll follow up with you after the program via email. Additional materials are available in the resource list widget that looks like a red folder at the bottom of your screen. You can find a copy of the program slides there. If you have any technical difficulties, please click on the Help widget. It has a question mark icon and covers common technical issues. A recording of today's webinar will be available approximately 1 day after the program and can be accessed using the same audience link that was sent to you earlier. With that, we will begin our presentation. So for today's agenda, we're going to talk about some policy changes and considerations in light of the coronavirus pandemic here in New York. We've broken our presentation up into 3 parts. Department updates, some things that have formally come out from the department and understandings we have based on our communications and relationships with them. Budget impact, where New York State and City, look to be falling based on the impact of the pandemic. And lastly, some issues, opportunities, and strategic considerations for taxpayers to keep in mind.
Thanks, Jen. We'll first discuss some updates from the department, and we'll specifically cover certain relief measures related to procedural requirements, the current status of the department's collections and audit activities, and we'll discuss how tax appeals have and will be handled during the pandemic. And we'll begin with just a brief recap of some of the procedural relief measures that were provided to taxpayers over the last few months. First, Governor Cuomo issued an executive order that, among other measures, permitted taxpayers to use digital signatures in place of traditional handwritten signatures. We've included in this slide some specific details of this authorization for your reference. And note that the governor did extend this authorization to the department for, quote, the duration of the natural emergency, though the most recent guidance from the department provided that this measure did expire on 7/15, and the commissioner would determine whether a continuing need existed to extend this date even further. We do expect them to continue to allow digital signatures. Next, one of the more impactful relief measures was, of course, the extension of deadlines for filing tax returns and extending payment dates while waiving any of the corresponding interest and penalties that would have been due if those payments were made late. Note that interest and penalties did begin to accrue on July 16th for those payments originally due on April 15th. And the next major filing deadline is October 15th for those taxpayers who requested those automatic extensions. We also provided on this slide a brief recap of penalty and interest abatement for sales and use tax payments for your reference. I'll now turn it over to Jen to address how the department has been handling collections during the pandemic.
Thanks, George. So in regard to collection activities, during the pandemic, we've been informed by the department that beginning mid-March, they suspended all collection activities. So they weren't, going out and kind of trying to collect actively on taxpayers where they otherwise would have been. The only action that they allegedly have taken and is consistent with our understanding, from taxpayers is that they have issued responsible person assessments and other warrants, where necessary to protect their rights and prevent, being in default and not being able to collect in the future. But collecting on, based on any of those activities, they they put a halt on. They are beginning to, reinstate collections and what's being referred to as, soft collections. In the past few weeks, the department's given the green light to reinstate collections against individuals and corporations who are, quote unquote, high earners. That's generally being identified as taxpayers with $250,000 in annual income that was not disrupted by the pandemic. How exactly they're going about figuring that out, given that, returns haven't been filed, during the period of the pandemic. Will be a little interesting. They're using alternative measures, but there will be some collection activities beginning to start again. As they start collection activities, expect it to be in the form of, soft collections, sending out notices to taxpayers, and less aggressive ways. They're hoping to get responses like that and not have to, worry about other measures at this point.
We've also been informed by the department that due to some issues they've had with accessing information, initiating new audits has been problematic. Though the department auditors have actively been working on pending audits they've already had. We've also learned that the department does not plan to schedule any field audits during COVID-19 related closures, and that during this time, no visitors are permitted to enter the department's offices.
So last but not least in this section of our presentation, what's going on with department appeal processes. I think it could be summed up by saying that things are moving, but they are moving slowly, unfortunately, even slower than they were moving pre-pandemic. No surprise, but, it's been a few years that the department has had a pretty big backlog of cases sitting at BCMS and sitting at the Division of Tax Appeals Tribunal. So, that backlog is going to continue to grow, and things are moving slowly, but they are moving. BCMS is sending out, I should say contacting taxpayers in order to schedule new conferences. They've had trouble trying to send out notices since they're not in the office. So a lot of that's being done through the telephone or email, but they are reaching out to taxpayers that have filed appeals and are giving them the option to conduct those conferences over the telephone. They're using the WebEx platform. They're going to try and start using it with video conference capabilities as well, although so far it's just been used mostly for telephonic conferences with the ability to share documents so that can assist in the discussions. DTA conferences, they are going to start doing, some virtual hearings, where they think they can do so. They're also anticipating being able to start holding in-person conferences in Albany beginning in October. But of course, we'll have to wait and see, how that pans out. So expect longer delays in scheduling, longer times until you get on their calendar, and then, there may be additional delays. Keep in mind that the options to have telephone conferences are optional. If you'd prefer, for example, to have a BCMS conference, sit in the queue and wait until you can have it in person again, the department, is certainly allowing that, but wants to provide the option to move forward using different platforms to taxpayers as well. And extensions. Statutory deadlines cannot, be waived. However, in regard to, other submissions that are not based on, statutory deadlines, the department's being very flexible to grant extensions in time to exchange documentation, and some other pleadings at the Division of Tax Appeals, briefing schedules. So, if those are needed by taxpayers, certainly something that can be obtained at this point. Next up, we're going to talk briefly about the budget impact of coronavirus, what we're seeing so far, what we expect to see, and what's really driving the budget impact.
So first, as predicted, both state and city revenues have experienced a steep decline as a result of the pandemic. We've included some of these specific figures. The top half of this slide, the state, at least in part as a result of extensions that were granted to taxpayers, has raised about $8 billion less than it did in, a year ago. In May, the state also saw a decrease of $767 million in tax revenue as compared to the same month last year, and personal income tax withholding has also declined. With respect to the city, it's expected to lose $9 billion in tax revenue through midpoint 2021 as a result of the pandemic. So overall, the state and city are both expected to continue losing considerable tax revenue as compared with last year's figures. And in response, state lawmakers have proposed legislation to close budget gaps as a result of this loss of revenue. One bill, which was introduced in May and currently under consideration by the Budget and Revenue Committee, would raise the top income tax rate to 10.9% for any income earned over $5 million. And next to Jen to cover the reasons for these shortfalls.
So what's actually causing the revenue shortfalls, and why do we care? I don't think it takes a rocket scientist for any of us to anticipate that the revenue shortfalls mean that the department is going to be less happy to hand out refunds and more aggressive on audit. As George mentioned, there's legislation that's being put forth to see what the department can do to try and pass new laws or regulations, potentially add some additional taxes, to try and generate more revenue. But that takes time to do. It's not always favorable to do, especially from a political perspective. So they're certainly going to work within what the tools that they have from the laws that are written to try and generate as much revenue as possible. So in the current decrease that we're seeing, as George mentioned, a lot of it, I guess we'll have to wait to see whether or not it's going to be a true decrease or a delay. The extensions for time to file income tax returns, personal income tax returns, corporate tax returns, obviously created a huge shortfall for the department, but, we'll see how much of that is made up by these filings actually being, submitted, and was it really just a timing delay? Sales taxes and, fuel taxes of the sort, though, those are absolutely impacting revenue. Less people are out shopping, spending money, driving cars, and that means that the tax revenue generated on those transactions, just doesn't exist the same way. So going forward, of course, sales tax, transaction tax revenues, I think we all anticipate will continue to be down for some time. And I'm not sure that, the spending, consumer spending is going to pick up quick enough, in this year for sure, certainly not to make up for the loss in the first half of the year. Corporate income tax revenues, those may decrease as well to, New York State, New York City, and we'll talk about that a little more in a few minutes. But the nature of having people working outside of, New York State, New York City, and, at their homes being forced to work remotely may very well impact the amount of corporate taxes that the state and city are able to generate. Personal income tax revenue, you may not feel that the impact right away, but I think that, there's a lot of people who have been spending time outside of New York State or City thinking about making moves, people moving out of, Manhattan, and there could be a real personal income tax, hit to the state and city based on people relocating out of the state and city.
And finally, we'll review some of the issues, some opportunities, and some of our strategic considerations related to COVID-19. So the first sort of major substantive issue we'll address, as Jen just mentioned, is the impact of telecommuting on sourcing an employee's wages. A quick recap, the relevant question for those employees who are working remotely outside of the state of New York is whether their telecommuting is either for the convenience of their employer, such that their wages are sourced to New York, or for the employer's necessity, such that those wages are sourced outside of the state. While legislation to address this issue has not yet been passed, we note on this slide that a bill was proposed in late May that's still under consideration that would essentially enable businesses to designate the work their employees perform outside of the state as a result of closures related to the pandemic as being out of their necessity and not subject to tax in the state.
Yeah, and I think that this is, a really interesting issue, and it actually is a really, interesting development in regard to the proposed legislation. New York has, and some other, neighboring states have what's called the convenience of the employer doctrine, where, when employees work from home, let's say outside of New York, but their home office is in New York, those work from home days, are still, the wages associated with those days are still treated as New York sourced income. This impacts withholding tax for employers and obviously the other side of the coin, the personal income tax for individuals. So what happens with all of these, mandatory work from home days, under the convenience of the employer doctrine? To be honest, I don't think it's crystal clear. There's a very long, detailed set of rules that, have been developed in the past by the department that addresses, how you determine whether the days should be sourced to the home office or, to the alternative place of work. And the nature of the test is really to look at, was working from a different location a necessity, such that, the job couldn't have been done without it, or is, a home office really being set up as compared to kind of just working remotely. And I think there's a really strong argument that just the nature of the fact that everyone has to be working from home, based on the demands of the employer, are enough to say that, the work should be sourced to where it's actually being performed and not to the home office. But, I don't think it's absolute. Legislation like this, though, that comes out and, proposes putting into writing the idea that these work from home days should be sourced to, the employer's, home office, the place that's generally worked, I think goes to support the argument that, there are certainly people out there in the legislature that believe that something like this is needed in order to source those days to, New York State, New York City, and not to the place that the employee is actually working. So I'm sure there will be more to be seen on, what New York decides to do with this, whether it's in, formal or informal guidance.
And to compare, that with what neighboring state New Jersey has done, it's announced that for the duration of the pandemic, New Jersey, will forego its right to tax telecommuters from, income that was derived in the state. Income will continue to be sourced as determined by those employees' employers in accordance with, the employer's jurisdiction, which has the effect of, shielding telecommuters from potentially getting, double taxed on that same income.
So another issue that arises from, the nature of telecommuters, all of us having to work from home are Nexus issues. In the sales tax world, we've all been trained in the past few years, to not worry about physical presence anymore. So I don't know that having, employees, working around the country is such a big impact for most companies for sales tax purposes anymore, although if, you're a small company, it may be. But the larger question, would have to do with corporate tax nexus, whether having, these employees now, potentially all different places at, homes, vacation homes, staying with family around the country, is that going to create physical presence nexus for the company in these different jurisdictions? There are some states that have, specific telecommuting rules, and that create some de minimis exceptions. Does one or two employees in a state, working remotely for a portion of the year actually create nexus? Some states, a limited number, have created exceptions or said, no, that's not enough. But I think the majority of the position for most states is, yeah, you got employees here working, it's going to create nexus. So something definitely to think about, the corporate tax footprint. Hopefully this is a relatively short-term issue and there may be some forgiveness, informally put out by states such that don't have to worry about thinking about a different corporate footprint based on, the time that this pandemic and, work from home type orders go on. But again, we're in a world where states are, losing revenue. So I think that everyone should prepare themselves for the idea that states are going to choose to be aggressive in regard to capturing any tax revenue that they can get as compared to being, overly forgiving. The next issue, apportionment of receipts. This is an interesting one. This is an issue, beyond New York, really for any jurisdiction where service receipts are being sourced based on where the services are performed. As a high level, corporate income taxes are determined based on taking, income and apportioning it to the state. Historically, a lot of states had a services performed rule for how to source services, an origin-based theory, and a lot of states have moved towards a market approach, looking to where the customers are. But there are still plenty of taxes around the country and in New York too, where the receipts are sourced based on where the services are performed. New York City's UBT, New York City's old GCT that's still applied to some companies, those still use a services performed methodology. And companies that had everyone working in New York City, for example, take a law firm, an accounting firm that pays New York City's UBT and the unincorporated business tax, and all the employees were working in the city, so they had a large apportionment fraction based on where services are performed. Now all of those employees are working remotely. That really sets the stage for being a much lower apportionment percentage. And I think that the city is thinking about this, thinking about the fact that they could lose a lot of revenue. Same tune as the other ideas. I don't think that they're going to walk away lightly, to the extent that there are servers and other technology and infrastructure that continues to remain in, the city that's used to help generate revenue. I think, expect to see the city maybe try and use that as an argument that that's really, where the service is performed as compared to the location where the employees are. There may be some informal guidance that, the city tries to put out on this issue, but think about this around the country, not just in New York for wherever there's a service is performed, allocation methodology, and think about how, in light of where, the task force and how and where work is being done, how that may change as compared to different years, not just where it's being done, but work really is being done differently by, companies. We're all being forced to adapt and do things in different ways than we've ever done before. So I think it's worth a thought of thinking about how that work is being done. Even in market states, thinking about where your market is. Is it in a different place than it used to be, based on how the work is being performed. So definitely something to think about. I wouldn't assume that your prior year apportionment percentage is necessarily reflective of what's going on with business this year. All right, so for our last slide, strategic considerations. This is an important and a fun one. Thinking about pending audits, appeals, return filings, refund claims. What are there different considerations you should have in light of the pandemic and its impact on the department? The short answer to that is absolutely yes. Credits versus refunds, this is something to think about when you're talking about sales tax refunds. There is an opportunity to take some of those refunds as credits on future returns, depending on the dollar amount of those and the way that you can, track them. That may be something that you want to do. Consider taking credits on returns, and basically it's a form of self-help. You're able to take the benefit of the money for the refund right now. Of course, that's not to say that the credit won't be audited and, the state may not agree with it, but it may be a way to, take control of that situation. And especially, there are plenty of refunds that are filed, taxpayers have filed or are filing, where you feel like, it's an obvious refund that's due. In those cases, taking credits may be a nice way to try and take a little bit of control of, the money that's due back to you as compared to waiting for the state to move things along. Refunds versus as filed positions, on a corporate income tax side specifically. Something to think about. I know a lot of companies tend to kind of have a position where they say, I'd rather, be aggressive and take an as filed position. We don't like to worry about refunds. We'd rather deal with assessments, and others vice versa. They'd rather take the more conservative position and then go for a refund. The benefit of taking positions on an as-filed return is the ability to conserve some cash right now. Basically the immediate withholding of that cash. Of course, that means that there may be more interest due if it's a position that winds up getting settled or that the department doesn't agree with, but certainly worth, considering how important, the time value of the money, not just the, overall time value of it, but really, does the time value of the money increase now because there's a need for conserving more cash, potentially. So just because, your company has done things one way in the past doesn't mean it's necessarily, the way that is best to be done currently. I'll skip over self-help, advance payments of contestant audits versus accruing interest. We're asked a lot of the time, hey, should I make a payment on my audit to stop interest? More often than not, we'd say, certainly don't make a payment beyond what you think, you may owe or what a reasonable settlement would be. It tends to be harder to get, refunds from the department than it is to get reduced assessments. Getting them to pay money out is harder, so you don't want to overpay and have to put yourself in a refund position, but making, an estimated payment, a partial payment may not be a bad thing to stop interest from running if you're worried about interest accruing because, as we discussed a little earlier, anticipate audits and appeals to take more time than usual, which means that, with more time, additional interest will accrue, and there isn't, any relief opportunity for that. And, as I'm sure everyone, tuning in today knows, interest is high in New York, interest on assessment. So maybe worth considering making some kind of partial payments to stop interest from accruing if you have, pending audits and appeals going on right now. Generally self-help, think about what the time frame is to get a response from New York on certain issues, questions. Everything's just going to take longer. So if there's opportunities to try and, remedy issues in alternative ways instead of through a formal channel to ask, one-off questions, it's probably worthwhile to think about based on the timing perspective. Probably, the one that maybe would have the most impact to taxpayers, if you have audits and appeals that are ongoing right now, settlement, is now a good time to settle? If you're in an assessment position, I think the clear answer is yes. The department, the state is going to be looking for money. They are, struggling as much as everyone else is with the work-from-home environment and transitioning to it. And I think that, in regard to assessments, if there's, if it's a case that the department thinks, will settle at some point, and the vast majority of cases do before they go to a formal decision at a quasi-litigation level in New York, then they're more interested in settling them now, helping to clear off the plate, to lighten people's workload, and so that they can focus on the cases that they need to audit that are harder to do right now, and to bring in some revenue. So, I can go as far as to say, when the Division of Tax Appeals sends out letters, from the judge's office asking the parties to talk, they used to encourage parties to talk. Now they explicitly say in their letter that they'd like the parties to talk and see if they can settle cases before status conferences. So, that thought process is definitely being pushed by the department. And if you have, current or aged audits or appeals, that have been kind of sitting waiting for a process, it's a great time, I think, to reopen up those files and see if there's, a new opportunity to try and move them towards completion to the extent that that's, beneficial for the company. Refund claims as well, we actually are seeing, settlement opportunities that I don't think were as alive before the pandemic on refunds as well. Of course, I think getting the department to pay out refunds, want to agree to pay them out, that's of course a little bit harder than them agreeing to take reduced amounts on assessment. But, in cases where the department, thinks that they're going to have to pay something and they're farther enough along with that, whether it's, a full payment or a partial based on a settlement, that, they're happy to get those cases resolved as well. So definitely, think about what cases, audits, appeals you have going on in New York, and I'd look at them through, a new lens, the light of coronavirus, and see if there's any new opportunities that may present themselves. As I like to think of them, maybe there are some, some New York tax silver linings to this pandemic that, we can try and find some good from. And with that, we conclude this edition of our New York webinar series. If you have any questions, feel free to reach out directly to myself and George. Our contact information is on the slide in front of you. We're happy to talk to you at any point about anything we discussed today or any other questions that we didn't get a chance to answer during the presentation. Thanks for tuning in, everybody. We look forward to hopefully seeing all of you again at our next webinar, which is scheduled for October 1st. Have a great day, everyone.